Hey everybody, Trinity John from Simpler Trading. Let's go ahead and do a review of the ticker symbol SMCI, Super Micro Computer Incorporated. So I'm sure this is going to be on a lot of people's minds. And if you were fortunate enough to be in this trade since early on, back towards November, December timeframe, this thing has really broken out. And you're probably asking yourself the question, can this continue to move to the upside? Well, there was some news out saying that, hey, maybe about a month ago or so that they had already did their preliminary earnings, but I checked with Thinkorswim and I found out that they were still going to be reporting today. So soon as we go from a daily chart and into the 4-hour chart, you're going to see that they spiked up towards 550 and now they are bidding and asking between 528 and 529. So this is what I want to tell you. Just cancel out all the noise and let's just look at the levels and talk about the chart for a few minutes. So this overall is a daily chart that I'm looking at here, and you can see that it was flagging. And then as we come over here into the weekly chart, you can see that I would imagine most traders would say this was pretty extended. However, you have to look at the time frame that it actually sat here and went sideways. And when we look at this candle here, which came in around August of 2023, we moved sideways all the way until we broke above this high, which came in January of this year. So I would have to say that this was some well time that they spent here creating a much bigger base. And what I'm focused on is wondering, what does this look like from a monthly perspective? So let's go in here and look at a monthly and a quarterly. So we're going to come here and you guys can see that we created that nice little base here. And again, this is a quarter. And then we'll come down into the monthly and just kind of get a good look at what this looks like. And I love to use the indicators to kind of help you understand the trend, especially when it comes to the cloud. So the trendy cloud here, you can see since really the beginning of time almost, or the inception, ever since that it's been above the cloud, it's been a buy every single time it's come back to this cloud. And you can see it was no different when we came back here in November of 2023. And you can see that again in December. And then finally, even in January, it gave you the opportunity to buy at the cloud. And now we get this huge breakout. And you have to look at this and say to yourself, okay, what is tomorrow's plan? So the way that I want you to look at this is I want you to take the catalyst, right? The earnings catalyst. And I want you to go ahead and measure from this pivot low here. So we are going to anchor our Fibonacci's from the pivot low. We're going to come up to the pivot high, and I am going to apply what I call trendy Fibonacci. So the trendy Fibonacci basically means this. This trend is measured from here to here. And if we were to break the 618, that trend is broken. So again, I'm using the pivot high and the pivot low here. And as you can see, we're basically just chopping around the 38.2 and 50. Now, the trendy Fibonacci also says if we can bid and stay above the 38.2, so we'll be looking for that tomorrow. If we could stay above that 529 level, and especially if we get over 537, I do believe that we have a high probability that will come up here and test this post-market high of 549. Okay. Now, if we wake up tomorrow morning and we're underneath the 618, I would say caution on the buy as I would be looking for price to drift back down towards the 500 level and possibly even go red. So this is the idea is I want to just be at ease between 38.2. So if we don't get over that, and I don't want to do anything if we break down below the 618. So tomorrow, if we wake up somewhere around here, I want to be looking to go long if we can stay above the 515.85 with a stop below that at your risk tolerance. So again, it's going to be volatile when we open up, but we do want to see 515.85 hold. This would be my trigger long, if you will. If we're above it when we open up, and my targets to the upside, I would simply just use these Fibonacci's 522, 528, and we are creating a pivot here. So again, it's looking pretty low probability right now that we're actually going to get above 537, but that would be a bonus. Now, what if we don't gap down and we actually somehow before market opens tomorrow, we're above this 537 level. Well, if that's the case, really, I want to keep it pretty wide and I want to stay long as 528 holds. And then I'm looking for that move up towards 549. Now, what if we're extremely lucky and we're opening up towards that 550 level? We're going to have to pull out what's called Fibonacci extensions. I'm going to take these off just like this, and I'm going to use that same anchor point. I'm going to click here and then come up to the pivot high. I'm going to double click, and this is going to give us some of these measurements here. We could be looking for prices as high as 562, and I'm going to use the 50% at 576. So again, expected range for me, let's go ahead and do this over, is going to be here. If we could break above that 23.6 that we talked about, okay? And if for some reason we pull back into the 618, which was 516, this is where I'm looking to go long. If we open up under 516, again, higher probability we come all the way back to this line in the sand around 502. This is my video on SMCI. I hope it helps you. And if you have any questions, guys, feel free to tag me in the main chat and I'll be happy to get back with you. Have a great day and we'll see you on Thursday.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me